In a world driven by global trade, financial support mechanisms like trade finance play a pivotal role. Yet the growing trade finance gap, now reaching a staggering $2.5 trillion, underscores a critical barrier to economic growth. This gap hinders the ability of businesses, particularly small and medium-sized enterprises, SMEs, and those in developing nations, to engage effectively in international markets. Trade finance is essential, underpinning around 80 to 90% of global trade. It provides the necessary liquidity and risk mitigation for transactions across borders, helping businesses navigate the complexities of international commerce. However, the increasing gap, exacerbated by factors like macroeconomic volatility, geopolitical tensions, and stringent regulatory demands, poses a significant threat to global trade dynamics. The widening gap, now 47% larger than in 2020, signals deep structural issues that could stifle global economic potential if left unaddressed. The reluctance of lenders to extend credit, especially to entities in perceived high-risk regions or those lacking robust financial documentation, is a primary driver of the finance gap. High interest rates and the scarcity of US dollar liquidity have further tightened the availability of essential trade finance, particularly in the aftermath of global disruptions such as the pandemic and geopolitical conflicts like the invasion of Ukraine. This expanding gap not only limits the reach and efficiency of global trade, but also disproportionately impacts SMEs and developing nations, which are often seen as higher-risk markets. The lack of financial support stifles these entities' ability to compete on a global scale, perpetuating a cycle of economic disadvantage and restricted access to international markets. The solution to the trade finance gap requires a multifaceted approach involving various stakeholders, including banks, governments, and international institutions. Innovative financing models, such as blended finance, peer-to-peer lending, and the strategic use of fintech, offer promising avenues to address these challenges. These solutions aim to reduce the perceived risk of lending and increase the availability of funds, particularly for underserved markets. Digital transformation in the trade finance sector holds the key to closing the gap. Technologies like blockchain and artificial intelligence can streamline processes, reduce costs, and enhance transparency, making it easier for businesses to secure financing. By digitizing trade documents and leveraging data analytics for better risk assessment, financial institutions can offer more accessible, efficient services to a broader range of clients. Multilateral development banks, MDBs, and export credit agencies, ECAs, play a crucial role in mitigating risks associated with lending to less developed regions. By providing guarantees and insurance against defaults, these institutions help lower the barriers to financing for exporters in developing countries, fostering more inclusive participation in global trade. To effectively address the trade finance gap, concerted efforts are needed from both the public and private sectors. Governments must enhance regulatory frameworks to encourage more flexible lending practices, while financial institutions should adopt more inclusive strategies that accommodate the unique challenges faced by SMEs and emerging markets. Strengthening cooperation among banks, governments, and international trade bodies can lead to more robust and resilient trade finance infrastructures. Policy reforms aimed at simplifying trade finance procedures and reducing transaction costs can also facilitate greater access to finance, particularly in regions where traditional banking services are limited. As the global trade landscape evolves, addressing the finance gap becomes increasingly crucial for sustaining economic growth and development. By embracing innovative financing solutions and leveraging technological advancements, stakeholders can ensure a more equitable and efficient trade finance system. The goal is clear: to create an environment where businesses of all sizes and from all regions can thrive in the interconnected economy of global trade. To learn more, download DMCC's full report at www.futureoftrade.com.